Hey, good morning, traders. Well, you can say this market just can't make up its darn mind. Um, I got the S&Ps here, the spiders here, the ETF for the S&P 500, and it's for the most part, there are many days where the market, when it gaps up from this type of consolidations, you can see these red bars here, these little gaps, and it comes right back in again. Right here. It seems to happen a lot, and there were a lot of other things besides this chart to suggest the market could go up, and it started out that way yesterday. With a gap up, and then after a small amount of time, buyers gave it up and ran, and prices declined, and now we've got this red bar here on the spiders, but it's within a trading range. So how much weight do we give such a thing? Well, I don't give it that much weight because the fact it is in a trading range, it could follow through to the downside. The futures are down a little bit more so on the NASDAQ side. But we've got an uptrend on the weekly. More or less an uptrend moving into a sideways trend on the daily. So is this just a rest before higher prices, or is it going to roll over? Well, by definition, with a sideways trading range, it could be either or. But if it gets wild and whippy, it's more suggestive of a rollover or a top. Well, it's a little wild and whippy here, and it wouldn't be crazy. I would say what preceded it was more wild and whippy. The gap and the run and the down and the momentum move back up again. So here is actually more contained or controlled versus what preceded it. So gaps and overlapping bars. However, it's not historically what I would call wild and whippy, and certainly the weekly chart is a relatively tight consolidation so far. So. More wait and see. The Qs, on the other hand, let's look at the futures before we do that. You can see the S&Ps here with 24-hour chart had run up yesterday, retested this breakout failure, which I explained in prior videos was futures traders getting ahead of the real market and getting more bullish than they should have, and got caught, and it came back in, and didn't follow through to the downside very much, but more chop and topping tail yesterday. So far an inside bar. If it can trade below these lows, right, that's your initial line in the sand. We go down and test this major support area. But overall, just a tight range here that's going on. And in a situation like that, what do? Well, you stay away. You go and trade other things where the patterns are clear versus sideways, erratic. You stay away from this. Oil is up several days in a row. In Monday's letter, if you're a subscriber, I told you that it was a greater likelihood that it was going to bounce from here for multiple reasons, and looks like it could probably get a little bit higher, and then we'll see where that all goes. Bonds are down a little bit today, but have cleared this resistance area with the wide range bar up. Sideways consolidation at the top, clearing the 200, 20 and 50 and rising. The 200 is beginning to flatten out. So all of this moving averages, observations are just ways of reading price action through moving averages. I don't subscribe to the need of moving averages to define trends or what's going on. They just are what I refer to as visual aids. Anyway, this is trending up. Right this morning, they're correcting back down again, which could help the market. And the Qs there, right, you can see the gap up from yesterday and the move back down again. And so what we have in a lot of stocks is somewhat similar patterns. The LRCX, which has showed relative weakness, and it's on our watch list for lower. If it can break here, it's got this little support here, but now it's closed below the 50. And so another way, is it closed below this little base here? So the 50-day on the daily time frame is widely used as a reference point by mutual funds and traders. So That's a little bit of a sell signal there, and big move down sideways. It couldn't rally, and now that's broken. So it opens up the door to a significant move lower, and one that we have a play in today, or we'll be setting up, is AMAT. And one of the reasons, besides what you're seeing there, is the monthly chart, which is a climactic sell setup. So we're looking for this to move significantly lower. The start of it would be breaking below today's low, which is just hanging there right now, as you can see. And of course, Apple hadn't been able to rally, chopping around. Pretty messy pattern right here, but if the Nasdaq's going to follow through lower, and some of the semis are going to follow through lower, well, Apple should as well. Nvidia, not so clear. Started to roll over, showed relative weakness, but it's got this support here. If this can crack here, that's going to open up the door to much lower prices. So one of those examples where you don't have to get in at the high. Once it clears the support, it's going to open up the door to probably some relatively easy trades on the short side, with this moving down into this tradable void down here. And you want to keep an eye on that. And there's Twitter up at resistance now, and I was keeping an eye on Snap lately. That looks like it's going down. Couldn't rally here as it got a little bit extended. And the financials, they stabilized. I mentioned them in yesterday's video. They stabilized here, but nothing to start getting excited about here. JPM is about one of my favorites. If it can clear this 88 area here, maybe you can see on the weekly, it just opens up the door to going back up to the highs there. And it showed relative strength to Goldman, which came back in to retest the 200, where buyers stepped up yesterday. Citibank showed relative strength, but it's pulled back here a bit. I mentioned yesterday that buyers should step up here, and they did, but it still hasn't triggered a buy in this time frame as of yet. And some of the oversolds and the got clobbered on in the Amazon news last week about buying Whole Foods had a little bit of a pop. Some plays intraday there. We'll see how far these get. And Costco, that was another one that turned back up there. So we'll see how far these can stabilize. And we got Baba here is up a little bit. That's been showing some strength, but definitely sideways. Facebook, big red bar. This is what I call wild, more wild than whippy, but it's still in an uptrend. Whereas in the past, you could look at the weekly, how tight it was, and just look at the difference there. So it's changing its personality, which means that there's uncertainty coming into the stock here at these levels. Whether that's from a fundamental point of view or just it's high, and it's moved up a lot, and traders are less hesitant about buying it at these levels. As you know, Google is down a bit here, so another red one. There's news on this one today, I heard before, but it's down with the same similar pattern, right? A similar pattern as to the big down move, the chop up, and yesterday's big red bar. And you can look at all of those for potential follow through. Tesla still hanging in there, getting a little bit choppy, but looking better than most. And it's just coming in. I had a big day yesterday. And what is it? Here's a low price one that maybe can do something. Had a good day yesterday. Avon Products. That had a wide range bar yesterday. Interestingly, the volume came in the day before. So that's kind of strange. But anyway, caught my eye yesterday in one of the scans. So I guess that's about it, guys. Gold, still a mess there. No real interest there, and internals not giving us any information as of yet. Still neutral, been that way for quite a while, so all these gyrations are just that. Don't get caught up with a bias, one way or the other for now. All right, guys, happy trading. If you haven't done so yet, go to the MasterTrader.com. If you're getting started in the markets, we've got a great foundational course there. Go to education, click on that. You can sign up for it. It's free. And, listen to it. If you got any questions, email me, Greg@MasterTrader.com. Have a great trading day.